Hi, good afternoon. Today we will do a video on Taparia Tools Limited, which was requested by a viewer on our channel. We'll do a quick stock review and see what my observations on the same are. And yeah, let's get into the video quickly. As a company, it has a turnover of close to 800 crores in trailing 12 months. Last year it was 764 crores. It's a profitable company with a healthy PAT of close to 88 crores last year, and the latest quarter PAT coming in at 28 crores. It has got a cash equivalent of 5.4 crore on books when the market cap of the company itself is 5.62 crores. Now it is a profitable company. It has got good sales. It has got a good book value of 191 rupees, while the market price of the share is 3 rupees 70 paise. Its market cap is more or less equivalent to the cash equivalent on books. It has got no debt on books. It has been growing its sales at a normal pace of 13.5% over the past 5 years. And the past 3 years, the sales growth has been a little more at 17.5%. If we look at the profit and loss account, the sales have been growing from March 2019, pre-COVID sales of 471 crores. It has grown to about 764 crores in March 23, and trailing 12-month sales has been 804 crores. So again, a slight growth can be seen. The operating profit margin, along with the growing sales, has been increasing, implying economies of scale coming in at play. They've improved from 8% operating margin to a 14% today. The net profit has grown from 24 crores in March 19 to 72 crores in March 23. And trailing 12-month profit is a little more at 89 crores. So it all looks good. The profit and loss reads well. Now the major test of any such profit and loss is whether such profits are translating into cash or investments or not. So let's have a quick look at that too. The balance sheet as such, the borrowings are literally not there. On the asset side, the investments have grown from 27 crore in March 21 to about 109 crores in September of 23. That implies an additional investment of about 75 crores. The other assets have also grown similarly from 179 crore in March of 2019 to about 267 crores in September of 23. Add to that the latest dividend. The company has paid out almost 50 crores as dividend in the latest last 18 months. So yes, the company is generating cash, and the profit and loss account and the profitability as shown by the books looks genuine to me. Now then the question arises, if a company is profitable, if a company is growing, why is the company trading at a PE of 0.06? Why is the price to book value of the company is at 0.02? Now, to be very honest, I can see only two reasons behind it. One, it is a very, very thinly traded stock. I will put up a chart. At times, it's like 5 and 10 and 20 shares being traded in a day. So it's simply, these shares are simply not available for trading. The number of shareholders is very, very limited at 300 shareholders as of today. Now, 300 shareholders is a very, very surprising thing to see. Also, the promoters officially hold 69.71%, but what's important to note is the public shareholding of 30.29% and its further breakup. You don't have to dig far to know that out of this 30.29% held by the public, almost 25% is held by relatives of the promoters. You can clearly see Shri Kanta Devi Taparia, Anant Taparia, Somanis, Mundras and Bangurs as the shareholders. So that leaves a public shareholding supposedly of only 8%, out of which also I am sure there will be shareholders within the family holding shares less than 1% and hence not a part of the disclosure. So the way I see this is the entire company is being controlled by the promoters and the promoter group. There is no third party holding as such. So when such is the case, then the price of the share becomes irrelevant, because if it has not been traded, you cannot liquidate and find a fair market value. Is the fair market value higher? Yes, should be much higher as per the conventional norms and wisdom. Will you get that fair market value? Well, I'm not very sure, simply because of the fact that the shareholding is controlled by the promoter family and only the promoter family. So if they don't want to sell at a higher prices, if they don't want the valuation of the company to go higher, then you can't do anything about it. Additionally, when this bigger chunk is held by the promoter family, there is a risk of the company being taken private, and in that case, you may get the short end of the straw and you may not get the value which the stock deserves. Fundamentally, the stock looks good, but the shareholding is such that, and it is so thinly traded, that saying that one should look at this for investment becomes really, really tough. With that, we'll quickly end the video and I'll see you in the next video.